Traders, welcome back to Forex Scope, your go-to channel for in-depth Forex analysis, precise buy sell signals, and future price trend predictions. Today, we're diving deep into gold, dissecting the action on the 15-minute and 1-minute charts to bring you actionable insights. If you're looking to sharpen your gold trading game, you're in the right place. Make sure to hit that subscribe button and the notification bell so you don't miss out on any of our crucial market updates. Let's get right into the analysis. The support zone is identified based on a significant price drop followed by a period of consolidation and subsequent upward movement, indicating potential buying interest. Specifically, after a sharp decline from around the 4,003.112 level, the price found initial footing and attempted to recover. The area between 3,992.333 and 3,986.506 represents a region where prices previously experienced a substantial fall, suggesting that this level might act as a floor for future price decreases. The significant volume on the candle closing at 3,986.775 at 176.244.2100 and the preceding candle's low at 3,978.251 during the large downward move at 176.244.1200, followed by a bounce back to 3,992.333, highlights this zone as a point of interest for price action traders. The lower bound is defined by the low of 3,986.506 from the candle at 176.244.3000 and the upper bound by the close of 3,992.333 from the candle at 176.243.9400. Marking a zone where previous selling pressure was absorbed and price action suggests potential buying to defend this level. The resistance zone is determined by a prior price ceiling where selling pressure was consistently encountered, leading to a reversal or pause in upward momentum. Observing the price action, we see a period where the market struggled to break above the approximate range of 4,007.833 to 4,009.747. The high of 4,009.826 reached on the candle at 176.250.1500, followed by a price drop and subsequent attempts to push higher that were met with resistance, as seen in the candle closing at 4,003.716 at 176.249.9700 and the high at 4,009.826 at 176.250.1500, indicates a level where sellers are actively defending their positions. The upper boundary is set by the high of 4,009.747 from the candle at 176.250.3300, and the lower boundary is marked by the low of 4,003.214 from the candle at 176.249.9700. This area represents a price range that has historically proven difficult to breach, suggesting that as prices approach this level again, a similar pattern of selling pressure may emerge, potentially halting further ascent and creating a ceiling for price movements. The resistance zone between approximately 4,006.059 and 4,006.846 was formed due to significant price action occurring between November 7, 2025, 19 hours and 4 minutes and November 7, 2025, 19 hours and 8 minutes. During this period, the price struggled to decisively break above this level, showing multiple attempts and rejections. The candles within this time frame exhibit upper wicks, indicating selling pressure at these higher prices, and some larger bodies suggest strong conviction from sellers. The price action here suggests a ceiling where sellers became more aggressive, pushing the price back down. This area also shows some hesitation from buyers to push prices further, creating a zone of equilibrium before a potential move. The presence of multiple candles interacting with this price range, with some forming significant highs near the upper boundary and lows not falling too far below, highlights its importance as a resistance. The highest price reached was 4,008.994, and the lowest price within this zone was 4,005.145, showcasing the price's back-and-forth movement within this critical area. The support zone between approximately 4,003.055 and 4,003.887 was established through notable price behavior observed between November 7, 2025, 19 hours and 44 minutes and November 7, 2025, 19 hours and 48 minutes. Within this time frame, the price found a floor and demonstrated multiple rejections from the lower bound of this zone, indicating buying interest emerging at these levels. Several candles show substantial lower wicks, signifying that although the price was pushed down, buyers stepped in to lift it, preventing further declines. This pattern suggests a clear area of demand where buyers were actively defending the price. The interaction of multiple candles within and around this range, with some forming significant lows and not breaching this area significantly, points to its strength as a support. The highest price observed within this period was 4,005.323, while the lowest was 4,001.721, illustrating the price's ability to find buying pressure and rebound from the lower end of this identified zone. The current price is trading just above the 1-minute support zone at 4003.055 to 4003.887. This suggests a potential bounce, with the price likely to retest higher levels. The Fibonacci levels also indicate potential support around 4000.712, reinforcing the bullish sentiment for the immediate future. Looking at the Bollinger Bands, the price is currently trading near the middle band, with the upper band suggesting room for upward movement. The tick volume has been moderate, and there are no strong bearish signals from the recent price action to suggest a significant drop. We anticipate a move towards the previous resistance at 4006.059 to 4006.846. However, if this resistance holds, a pullback to the identified support levels is probable before any further upward continuation or consolidation. The interplay between the 15-minute and 1-minute timeframes, combined with the confluence of technical indicators, points towards a cautiously optimistic outlook, with opportunities for both upward and downward movements within defined ranges. A break above the 1-minute resistance at 4006.846 would signal a stronger bullish trend, while a decisive break below the 1-minute support at 4003.055 could lead to further downside testing of the Fibonacci support. It is important to monitor price action closely for confirmation of these movements.